In the ever-changing Forex market, staying informed is crucial for success. Here's the latest professional analysis from RobotfFX. Markets are calm as US economic activity is reduced after the President's Day holiday and there are no major economic releases, while much of Asia, including China, is already on holiday for the Lunar New Year. However, activity may pick up noticeably from today. The minutes of the Reserve Bank of Australia's last meeting said the board judged there had been a considerable shift in the balance of inflation risks that warranted a quarter-point increase in the policy rate to 3.85. The board was not certain whether further tightening would be required, but it stressed that inflation has exceeded the target for 3 years and that financial conditions remain insufficiently tight to restrain excess demand. In effect, this means the RBA has signaled readiness to raise rates further if inflation does not show signs of slowing in Q1. Markets now price roughly a 60 probability of a 25 BP hike in May and are fully confident of a further increase by August. Watch in-depth trading tutorials and eBay reviews on the RobotfFX YouTube channel. Subscribe for free tips. The inflation threat in Australia appears to be intensifying. The IMF has warned that Canberra's 5 down payment program for home buyers will, for the first time, push up housing inflation and should be scrapped. The RBA had warned of such risks months ago, but now even the bank appears surprised that it may need to revise its outlook. This comes as the Fed also plans to ease bank capital requirements to try to stimulate mortgage lending at lower rates. Australia's labour market report will be published on Thursday and the January Consumer Price Index on Monday. The CPI release will probably be the most market-sensitive item. It will either confirm concerns about rising inflation and, accordingly, a further RBA rate increase, or relieve pressure if it is weaker than expected, in which case the Aussie would retrace slightly. Net long positioning in AUD rose by 0.5 billion over the reporting week to 2.4 billion. Demand for the Australian currency has been trending up for 11 weeks. Speculative positioning has become more bullish, and the implied price continues to rise steadily. Orders hit a 3-year high at 0.7150. The corrective pullback is shallow, and there is every reason to expect the rally to resume after a short pause. Support is at 0.6949, but a retracement to that level is unlikely unless January inflation on Monday shows a marked slowdown. A more likely scenario is continued upside and a break of the 0.715060 resistance zone. Technically, that would mark a strengthening of the bullish impulse, although the probability of a correction increases after such a breakout. The material has been provided by RobotfFX.org. Automate and optimize your Forex trading with RobotfFX and T4 and T5 solutions. Visit us today for the best trading tools.